How you doing? My name is Brad Stinson, the Mortgage Marine. In this week's installment of VA Home Loan I.E.D, I'll be discussing and breaking down what the VA Lender Handbook says in regards to bankruptcy. Now this right here ties in to my previous VA Home Loan I.E.D. VA Home Loan I.E.D lender overlays. There's so much confusion that surrounds this. Bankruptcy. Now, for reference, I'm going to be referring a lot to Chapter 4 of the VA Lender Handbook, and I'm actually going to read you word for word what the guideline states, because that's where the confusion lies. Okay, so Chapter 4 of the VA Lender Handbook states that just because a veteran has a bankruptcy in their credit history does not in itself disqualify the veteran for approval of the loan. I say this in every video, and I hope you're starting to get the gist of this. Who you work with truly does matter, because the VA Lender Handbook goes on to state the loan officer must develop complete information and all the circumstances surrounding the bankruptcy. They must consider the reasons and the filing type. Now, this is a little bit of an extra work. This next part that I'm about to go over is going to really break down that hashtag fake news about the VA home loan where you must be 2 years or more discharged from a bankruptcy. It's not true. Here we go. All right, here we go. Bankruptcy filed under straight liquidation and discharge provisions under Bankruptcy Code Chapter 7. This right here is where your debts are completely wiped clean. It's like hitting the reset button. So I want you to listen closely to what the VA Lender Handbook says, because right here is where all the confusion lies. If the bankruptcy was discharged more than 2 years from the date of closing for purchases or refinance, it may be disregarded. That's pretty cut and dry. That's the very first line, because there are 4 more lines that really dive into this and prove that it's fake news. The next one down, if the bankruptcy was discharged within the last 1 to 2 years, listen carefully here, it is probably not possible to determine that the veteran is a satisfactory credit risk unless both of the following requirements are met. Requirement number 1, the veteran has obtained consumer credit subsequent to the bankruptcy and has satisfactorily made payments for a continued period of time. It does not give a specific date. Number 2, and this one is where everything falls apart. The bankruptcy was caused by circumstances beyond the control of the veteran, such as unemployment, prolonged strikes, medical bills not covered by insurance, and so on. The circumstances must be verified. That's the problem right there, and that's why it's probably not a possibility. I don't like that wording. Right here, you yahoos, us vets, we go through divorce like crazy. All right, get it. We all get it. Divorce is not generally viewed as beyond the control of the veteran. But you tracking where this confusion comes from. We've covered 2 years, 1 to 2 years. Now let's cover 0 to 12 months. If the bankruptcy was discharged within the past 12 months, listen closely, it will generally not be possible to determine the borrower is a satisfactory credit risk. So I just went over verbatim the guidelines that from the VA Lender Handbook, what the VA requires for Chapter 7 bankruptcy. Did you hear me say no under 2 years? No, you did not. This is where the confusion lies, because many lenders read the first line and say no, because it requires a little extra work. Who you work with truly does matter. Because if you read down, there is a possibility. Is it going to happen? Is it not going to happen? I don't know. Did you learn from your mistakes? That's the key. When you file bankruptcy, lenders look to make sure that you have learned from your mistakes. You got it over your head. We've all been there. You hit the reset button. Where are you at 12 months later? Where are you at 18 months later? Where are you at 24 months later? That's what truly matters. Now let's go over bankruptcy petition under Chapter 13 of the Bankruptcy Code. In short, it's Chapter 13 bankruptcy. What this is an attempt to repay your debts. So you own it. Hey, I messed up. I got it over my head. I'm going to own it. I'm going to make a monthly payment, one monthly payment for a predetermined duration to a court-appointed trustee. Now, what the guidelines state that says if the borrower has finished making all payments, the lender may conclude the borrower has reestablished credit. That's pretty cut and dry. But what happens if you've made 5 consecutive payments on time? 12, 15, 18, 24. But you're still in the Chapter 13 bankruptcy. Well, jeez, a lender has to do a little bit more work, I guess, right? Because if you read a little bit further down, if the veteran has made at least 12 months of payments on time and the trustee or bankruptcy judge approves of the new credit, aka mortgage, the lender may give, listen closely, favorable consideration. Well, how favorable are we? Now here, this is where you have to dive a little deeper. Maybe ask for utility statements showing and proving that you are credit worthy. You have made monthly payments on time and you've learned your lesson. That's the key takeaway here. If you file bankruptcy, did you learn your lesson? Because that's a huge component of the VA home loan when determining qualification. You're asking to borrow a large chunk of money. Lenders want to ensure that they get that money back. So yeah, we've all had credit mistakes in the past. Mistakes are great as long as you learn from them and grow from them. And that's what a bankruptcy is. Who you work with matters. Lenders that actually will help put the storyline together, compile your file correctly to submit to the underwriter for approval. Now, forewarning, whenever you're dealing with a bankruptcy under 2 years, expect there to be some long time delays, especially during COVID times. Now, I can personally tell you I've closed 3 VA home loans still in Chapter 13 bankruptcy. One was 12 months in, one was 14 months in, and one was 13 months in. It is 100% possible. It is 100% doable. That's what I got for you today. The VA home loan has a lot of red tape that needs to be navigated through, and you want the right team behind you. Please, if you have any questions, leave them in the comments below. If you have any feedback, I appreciate it. If you want me to do any other videos and help discuss and break down some more of the VA guidelines, I'm happy to do so. Leave them in the comments. Have a great week. Again, my name is Brad Stinson, the Mortgage Marine. Get after it. Semper Fi.